Very good afternoon, good morning, and welcome to HYCM's live trading workshop with myself, Giles Coghlan. I hope everybody can see my screen and hear my voice okay. Let me just check that's coming through okay. Yes, I think that's all coming through okay. Great. If you can just let me know you can hear my voice and everything's doing all right on the recording side of things, that would be super. And as we get started into the webinar, don't forget, as we go through different entries, exits, different instruments to trade, all of this is from a educational perspective, and it isn't a signal trading service or an invitation to trade any particular instruments, etc., etc. It is an educational webinar. Now, the idea is that you look over my shoulder, someone with a professional trading background, you see how I'm looking at trading it, and then that's an educational perspective. So with that out of the way, I'm going to show you what I'm expecting for the Canadian CPI print today. A very interesting reading, and we're just going to run through what's going on in the big picture with the Canadian dollar, and that's going to help us understand the overarching perspective. So it's going to help by doing this by looking at the index for the CAD. And I'm going to use that just to talk through what's going on. Now, the Canadian dollar has found some weakness recently, and we've been expecting that weakness because at the last Bank of Canada meeting, the Bank of Canada really started to talk about the prospects of slowing growth. They're concerned about the housing market, and particularly how interest rates are cooling the housing market. And the Bank of Canada actually projected a recession for the first half of 2023 that they're expecting the Canadian economy to come into. Remember, Canada's key trading partner is the US. So with the US economy starting to show signs of stress, then the Canadian economy's central bank indicating they're anticipating a recession. So the expectations are that the Bank of Canada will be less aggressive in terms of hiking interest rates moving forward. And the key driver for the path of interest rates for Canada is going to be the inflation print. And today's inflation print is coming out. Now, we're going to have a look at the key metrics that we're looking at. That's the retail sales data that's coming out at the same time. So core inflation, this is the previous reading. Headlines come in at 6%. So we have pulled back from summer's high of 6.2% for the core reading. And what the market wants to see is this continue to drop further. And we'll see that expectations are for it to drop further. Headline well down from the 8.1 high of the summer. At 6.9 was a previous meeting. So the trend is moving lower. Similarly with the core, the general trend is moving lower. And with the trim mean, which is one of the Bank of Canada's preferred measures of inflation, we can see that it's also ticking generally lower. So the headline, the core inflation, the trim mean is starting to see inflation pull back. So what the market's going to want to see is confirmation of that pullback. Now, in terms of the core, 5.6% is expected. That's down from the prior 6%. The headline is expected to be 6.9%, which is in line with the prior reading. And the trim mean is expected to fall to 4.9%. So the market in aggregate is expecting inflationary measures to slowly track lower. Now, if that does happen to be the case, and we see inflation tracking lower, that should be negative for the Canadian dollar, and we would anticipate CAD weakness. Now, the best outlook for CAD weakness would be if we had the month-on-month coming in below 0.3%, the core inflation coming in 5.6% or lower, the headline below 6.4%, and the trim mean 4.9% or lower. Ideally, what I would like to see is an on aggregate miss across the board, all in red. That should result in CAD weakness. And the obvious pair to potentially trade that I would be looking for I would expect to find downside in the CAD yen. But there's one thing extra that I would like to see to really give me a clear CAD yen downside bias, and that would be what's going on with the US retail sales print at the same time. Now, we know the US CPI print from last week has resulted in some significant dollar weakness as of late. We just go over here and look at the index, you'll quickly be able to see the dollar index has been tracking lower over recent trade after the latest CPI print pushed lower, and expectations are that the Fed's only going to hike by 50 basis points now at the next December meeting rather than 75 basis points. That's allowed the dollar to weaken. Now, if retail sales push lower today, that's going to play into that narrative that the US consumers may be struggling, then therefore the Fed doesn't need to over tighten. So that would be dollar negative. If we look at the retail sales prints that we have, we can see year on year, the overall trend is tracking lower. 8.2 was the prior reading. And retail sales month on month, you can see the overall trend is tracking lower with the prior at 0%. So within that context of tracking lower retail sales, if we see the expectations come in at 6.9% or lower, and we see the retail sales month on month coming in 0.1% or lower,
shares of retailers in the
preferably minus 0.1%, that would likely give further yen strength, because we expect the dollar yen to fall. And so if we saw a big miss in the Canadian data plus a miss in the US retail sales data, that does open up a really nice bias for the CAD yen downside. Okay, so that for me, and from my perspective, is the best opportunity. A miss in the Canadian data, a beat in the US data, and that should result in CAD yen downside. Now, there are some other options here as well. So let's say you get a big miss in the Canadian data and a big beat in the retail sales data. So if this is a miss in line with what we're expecting, but the US retail sales data, instead of coming in low, comes in hot, above 8.2, above 0.9, you know, if all these readings come in green, all these readings come in red, then I would expect the CAD to weaken, because that's what we'd expect, but I expect the US dollar to reverse some of its strength. So that would give me a pretty strong bias for US dollar CAD upside. Okay, so that's what I'm expecting. Couple of other things to note. Let's just look at interest rate expectations. And we can see here the interest rate expectations have been falling. Okay, so markets are now expecting a lower terminal rate going forward, and the current expectations is 72% chance of a 25 basis point hike. So if there's a big miss, then you'd expect to see that 50 basis point hike get priced out more and more. So there's a little bit still to be priced out in terms of further CAD weakness. Now, looking at expectations, let's just summarize this to make this clear. So if the headline for CAD CPI comes in below 6.4, below 0.3, core year on year is below 5, you should have said below 5.6%, sorry, then I'd expect CAD weakness and CAD yen selling. That's what I typically expect. But if we print headline above 6.9%, core above 1.2%, core above 6%, I would expect CAD strength. But I don't expect that CAD strength to last. I expect it to fade, because we know the Bank of Canada is looking forward to a recession. If the US retail sales prints below 5% and below 0.2%, that should weaken the dollar yen. So if we get a weak retail sales print and a weak CAD CPI print, then that's CAD yen weakness, as we looked at. let me just get this. I've got to sort of just bear with me. I've got a combination outlook here for us. I just didn't put that across. Just bear with me a second. Okay, apologies for that. This is probably the most helpful outlook. You see, if we get the weak CAD CPI, strong US retail sales, then I would anticipate dollar CAD upside. If we get a weak Canadian dollar CPI and weak US retail sales, I'd expect that to result in CAD yen selling. Okay. If we get a strong CAD CPI and a strong US retail sales, I'd expect the CAD yen to gain, but I'd expect that to be faded. So that last one I need you to have a look at to understand. Because if the CPI for the Canadian data is really strong and the US retail sales is really strong, then I'd expect the CAD yen to gain, but then to find sellers as it moved higher. Why? Because is a strong CAD Canadian CPI data going to massively change the Bank of Canada's mind? Is it going to push them away from recession? They're unlikely to. Now, obviously, there are risks here. So if it was super, super, super strong, it could change the narrative. And you might see the CAD yen continue to gain and gain and gain. But I think risk can be fairly easily defined. So I'm going to show you the key levels that I'm looking at. But just bear these overall scenarios in mind. That, you know, this is the key. Alongside the detail, this is the key kind of framework that I'm using for the print. Now, with all of that being said, now let's go and have a look at the charts. And here we have the CAD yen. So with the CAD yen, the best opportunity is going to come from a miss in the CPI print. That's be CAD weakness, and a beat in the US retail sales, which would be significant CAD yen downside. So we've got this potential trend line there. So all you can do is you can use this pivot point to define risk. So if that was the print, entering any point here at market, and this pivot point will probably define risk. The ultimate target would be 104.20. If you just look at the daily chart, we're seeing a false break of an inside bar. So that's a false break pattern. So if that moves lower, then I would expect sellers on stops to get tripped if we go below 104. And if we go below 104, next target is 103.50. Okay, so just bear that in mind. That's a possibility. Okay, in that scenario, will we get a miss in the Canadian CPI but a beat in US retail sales? Now, the other alternative we're looking at is dollar CAD upside. So the dollar CAD upside would be if we got a miss in the Canadian CPI print but a beat in the retail sales. Now that would result in dollar CAD upside most likely. And again, stops can be placed just underneath that. This is a perfect area to place stops, just underneath this region, this 1.32, this 1.3230, and we can look for a move back up to this 1.3450 area. That maybe just a little bit lower here, just around that 1.3, probably 1.3400. Yeah, that would be the area really. Okay, so you can look for a move up into that region. So that would be the scenario: a miss in the Canadian CPI, but a strong beat in the US retail sales. That would be positive for the dollar, negative for the Canadian dollar, and we expect this to surge higher. So you've got a false break of Harami inside bar, and then you got to trail your stop underneath. Okay, so if you go with the break and just have it as a swing trade and trail your stop as you move forward, that would be perfectly legitimate. The final scenario we're looking at is fading CAD yen strength, and that will be a scenario where we get a strong beat in the Canadian dollar yen. So if Canadian CPI print, so if the Canadian CPI print comes in very strong, that we should support it for the CAD. And if the retail sales comes in like strong, that should favour CAD yen upside, and I wouldn't be adverse to trading it long, and you can just use your stops like underneath that R1 pivot point, underneath the pivot point, and look for a run up. And then if we get to 106 sort of 40, 50, that's where I would definitely take in profit, but I'd expect sellers to step in, right? So I wouldn't expect this to keep moving higher, because does it change the overall? Probably not. You might get a little bit of upside. You have to watch that you didn't get, it wasn't faded from 105.60, this R1 pivot point. So if in that scenario, and this is a scenario of a high CPI print out of Canada, but we get a weak, we get a strong retail sales. Okay. Better scenario would be if we get strong Canadian CPI, but a slightly weaker retail sales. Then that would be an obvious one that we just want to fade as it pops up. Okay, it pops up and expect it to be faded either from this R1 pivot, so you can look at there, and then if it starts dropping lower, you can put your stops potentially above that R1. The best scenario would be up to here. If we got to move up to that 200 exponential moving average, that's where I definitely look at fading. And that for me will be in the scenario of a high Canadian CPI, but say like retail sales was like middling or not great. That would be suitable to fade CAD yen. So this, it's quite a fiddly one today, because we've got the Canadian CPI data at the same time as the US retail sales. And remember, the dollar will impact the yen. So that's why we're having to play this sort of very, very tight moves. Now, I hope that's clear. If there's any questions, please do come and ask me your questions now. I'm going to just go through these, overall expectations, what I'm looking at. Just make sure you've got, a clear understanding of that. And, the market can always surprise in the way it reacts. So as always, and like I always do, very carefully defining, limiting my risk. And one of the obvious risks is that if the Canadian CPI print is so high that markets start pricing a more aggressive Bank of Canada, that could change the outlook. Okay, so you have to be aware of that. So that will be the scenario where the CAD yen doesn't get faded. So if the CAD CPI here is really high, and it changes the Bank of Canada's total perspective, then that CAD strength may not be faded. You get a sense for it. For me, if it's like, if it's just high, but not ridiculous, that's more like it's ridiculously high, you need to think about that. And then that is the overarching playbook. That if you get a weak CAD CPI, strong US retail sales, upside US dollar CAD, like that. Weak CAD CPI, weak US retail sales, CAD yen, like that. And I like this one as well, strong CAD CPI, strong US retail sales, fade CAD yen strength. But also, if you've got strong CAD CPI and like medium or on point US retail sales, then I would probably prefer to fade CAD yen strength on that. Does that make sense? I'm conscious today's quite a, it feels a little bit like algebra today. If X plus Y equals Z, it's just one of those days, unfortunately. Okay, I'm taking it that silence is assent and everyone's clear on expectations. If there are any issues, please do let me know. Otherwise, don't forget to join me again on Monday when we'll have the FX look ahead with myself, obviously, for next week. Okay, folks, take care, and I hope you have a very good rest of the session. Thanks, everyone. Now, goodbye.